Good evening, everyone, and welcome to this special edition of Women Teach Trading and Investing. And first of all, I would like to wish all the women in here happy International Women's Day. Women make fantastic traders. They are not reckless in trading and they're really well calculated. So I want to congratulate all of the women that are traders in here. All right, so today I will be talking about generating a 6 to 7 figure income, trading 2 hours a day, and literally done. This is what I have been doing for a very long time and has not always been the case. And I have spent many, many hours in front of the computer, but just to find out that less is more. And we're going to dig into that today. I just trade the New York trading session open, 2 hours and done. I will share with you my sweet spot for trading and exactly my trading hours, and I will share some of my trading strategies with you today. So in 2022, if your goal is to trade your way to financial independence, you probably know that you need to put a little bit of effort into it, and you have to start planning on how you will be achieving the desired results for 2022. So what is your goal for 2022? So in order to get started on your goal, remember, you need to have an action plan. You need to have a blueprint, just like any architect has a blueprint that hands it out to his contractors to build you that dream house. The same way you have to have a blueprint for your financial future. And what better time is than now when inflation is through the roof? And even if you do not have the desire to, for example, decide on trading the markets full time, this is something that can definitely supplement your income. So if it's not for full-time income, it can supplement your income. So start early. To learn how to trade doesn't happen overnight. And there are a lot of things that you need to keep tabs on, moments in time, reversals, patterns, strategies that you deploy at certain times, etc. So trading is very, very complex. It's not hard, but it's not easy at the same time. So it takes a lot to get the engine running in order to have all the wheels spinning. Volatility is very high and will remain high throughout 2022. We have a lot of things that are happening right now. We have the Russia-Ukraine war. We have the FOMC that are probably going to raise rates in case they decide not to. And if the impossible will happen maybe next week. So next week is going to be a very, very, very important week for the markets. Also, we have inflation and we also have midterms election in November. So before we dig deep, I just wanted to let you guys know that we're very proud that TradeOutLoud has been nominated and has been named the overall winner for Best Financial Literacy Tool at the end of 2021 out of 400 companies that are revolutionizing fintech. And we have just won first prize. And that what that means is this award, it brings a lot of, it means so much to us because it is a recognition of our hard work. It is a recognition that our traders have voted us for the best education and also for the best services based on our track record, based on our trading. I was mentioning that I only trade futures for 2 hours or less. Later on, I will tap on this and let you know how and why I have decided to only trade 2 hours. But in January 2022, which definitely was a difficult month to trade, we were in the middle of the shift in price action, in the middle of the change of guard, if you will, from bullish to a more bearish bias, a lot more turbulence that came with the new year. For example, in January, we executed 32 trades. As you could see, we don't take a lot of trades. Amongst which we had 23 winning trades and only 9 losing trades. And this is how the proportion should be when you should be trading. This is a sign of consistency. The win ratio is 72%. This is incredibly high. So anything that is above 60% is considered above average high. So what this means is that based on our results, we have yield over $25,000 per contract, trading with only one contract. So you could see the full track record on our website. If you want to navigate to our website, it is TradeOutLoud.com, and just click the service tab. And if you could click on the futures trading room at the bottom of the page, there is a button. And if you click on that button, you will see the track performance since 2016 or 17, when we have just started, the service. In February last month, which was a lot more difficult than January, we had a total of 39 trades, 28 winning trades, and 11 losing trades. So you could see that the proportion is also maintained steady with a win ratio of 72%. So you're asking, okay, so yeah, this is January and February. The reason why I talked about January and February because these were incredibly difficult months, and a lot of traders have had a lot of difficulty trading this environment, and they're still having trouble trading this environment because it's not an easy environment. Obviously, there are unique trading opportunities in the market, but you just have to have the patience in order to wait for the proper setups to occur. In 2021, we average, and the results are per contract. Again, I highlighted the results are per contract. If you would have taken all of our trades, you would have made $161,000 more than that at the end of the year. And in 2020, where we had a stellar year, in fact, with the volatility that we had from the pandemic and with the crazy price action that we had in February and March. Actually, February and March were some of our biggest months that you could see here. February, March, and April, some of our biggest months. The larger the volatility, the better, and the more careful we were into our trading. So I just want to say hi, everyone, for those of you that do not know me. And if you guys are here for the very first time, my name is Anka Metcalf, and I'm the CEO and founder of TradeOutLoud.com, which is a trading education company that is specialized in educating individuals how to day trade and swing trade the futures and the equities market professionally. We take individuals from students to professional traders. Before coming into day trading, I have spent a lot of years in investment banking. And I'm the designer of an institutional proprietary trading system that is based on a fusion of price support resistance, trigger time, specific price zones, chart synchronicity and divergency, a strict set of trading rules, and a 10-point scoring system that enables myself and my traders to identify trades with ease. And all this to try to find high velocity moves. So I'm going to show you a velocity move that happened today. We have certain levels that project this volatility, and we know to trade in sync with the institutional money. We don't follow institutional money. Following institutional money means literally chasing, right? So when you chase price, you follow price. So that means you're 1 step or 5 or 10 steps behind price. So if you guys want to get a hold of us, you can find us on social media. The handle is Trade Out Loud, and our website is Trade Out Loud. All right, so now that you want, let's say you have the desire to start trading and to learn how to trade, it is very important to know that trading is it is considered a very risky business. But I will come here and prove to you that it's no riskier than crossing the street and having a chance by being hit by a car. If you think that risky is drinking a glass of water, then you can choke. With trading, there's a calculated risk. And with a calculated risk, you can actually start making money if you know how to budget correctly. One of the most important things in trading is risk and risk management. Every single trader that is in here or out there should start trading by learning money management first, and then diving into strategies, diving into candlesticks, diving into reading price action, into trailing, into technical analysis. Because if you do not understand risk, you could be a master in chart reading, you could be a master in strategies, and you will lose money consistently, and you will literally blow up your account. A lot of traders, because they do not know money management, fear the markets. Well, in reality, you should not fear the market. I understand, and fear is, that negative sensation, but at the same time, it protects you. But if you know how to handle fear, and if you know how to properly manage your trade, whether it's a day trade or a swing trade, an options trade, or a long-term trade, you will see that this fear is going to get smaller and smaller and smaller until it disappears. The most important things in trading are rarely discussed. And I will say that number one is this money management, because I'm pretty sure right now that everybody would go like, okay, yeah, she's talking about money management, but how is it really done? Well, the reality is that it's super simple. If you could start with this simple principle, you could start as soon as tonight or tomorrow. Look at your account size, open it up, see how much money you have in your account. And it doesn't matter whether you have a big account or small account. All that matters is that you calculate proportionally how much you need to risk for your trade. The next step is to decide what kind of trader are you? Can you tolerate a little bit more high risk, or are you tolerating risk very differently because you're fearful, because you don't have a good handle on the market, you're still in the beginner stage? What I do recommend to my traders is that if you are at the beginner stage of your career, of your trading career, to risk evidently much less. 1% or 0.5% per trade is more than enough until you start running your business and starting to trade. As you get more consistent in your trading, then you can up your size, and the upping of size, literally can be done only when you see your account is growing. So I personally look for 25% in my account before I raise my risk level. But try to do this. So for example, if you're a day trader, try to look for trades that are so compelling to you that you cannot stand the thought of not taking it. Taking that certain trade. Stop just getting in and getting out. I have discussions with the traders every single day that they tell me I went long here, I went short here, I did this and that. Well, in reality, when we look at the technical chart, there were no short opportunities. There were no long opportunities, for example, but they got into this trade because they thought it was reaching resistance, and they thought it would be a good idea to short. So you have to be very careful that what you're seeing in the chart matches with what you're thinking about the chart. So like I said, starting with tonight or tomorrow, look at your account size. If you're a day trader, because this topic is on day trading, decide on the number of trades that you may want to take per day, whether it is 3 or 5 or 6, how many trades you want, and that is going to be your allocated budget. So therefore, when you're going to incur a loss in the in that particular trade, you still have enough ammunition to go after another one. And then if you consume literally all your bullets, then you're out for the day. And I think it's fair enough. So going back to our discussion about the most important parts of trading that are rarely discussed other than money management, definitely confidence. You need to have confidence, and confidence and conviction come from knowledge. The knowledge that you apply when you wait for a trade, the knowledge that you apply when you recognize the pattern, when you recognize a trend. Patience also derives from knowledge, because I don't really understand why traders do not have patience to wait for the trade. You have to wait for the trade to come to you and not chase the trade. It is, and I know it's literally, I would say it's one of the big faults of traders when they are at the beginner stage, when they see green, 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 to start chasing, hoping that they're going to get a little core of that move, and then they're going to be out. That is really a bad strategy, because you don't know that at the moment when you jump into a trade, that trade may be into resistance, and there may be some institutional scaling out into that level. So you have to have the patience to wait for the trade to set up. Don't chase the trade. The trade is always going to pull back. The trade is always going to offer you plenty of opportunities. You need mental toughness because at times the market can become rough and multiple stop outs can occur. And especially now in volatile markets where the stops are a little bit wider, you will see that if you do not know how to position size, this is also part of money management, you're going to have really bad losses. Discipline is very important to stick to your plan. For example, if your plan says, hey, I'm only going to take 3 trades a day and I'm only going to trade, for example, stocks or ETFs or futures that are in uptrend, and I'm going to look for pullback, let's say to the 20 simple moving average. I'm going to wait for a technical rotation to happen or for one of the strategies to apply into that location. Respect your plan. So if this is your plan, respect your plan and don't take it otherwise. Remember, what you see and your first let's say diagnosis of the market is the correct one. The more you overthink it, you're going to apply thought, and the thought process may be detrimental to the life of the trade and definitely to the trade itself. You need education. So like I said, I don't care where you're getting your education, but you need to know money management. You need to know technical analysis. Why do you need to know technical analysis? This is a highly, highly technical market. 87% of the market volume is algorithmic trading. And of course, preparation and experience. Nobody can transfer the experience, but I help my traders with my personal experience that I share every single day in the trading room. And I tell them why I see the market going up or why I see the market going down or why I'm sitting on my hands and not taking a trade, for example, today or tomorrow. All these factors represent 90% of the battle. So you can see here that right off the bat, the strategy, only 10%. So regardless of your trading philosophy, if your head's not right, you won't be successful. So you need to make sure that you have, a really good approach to trading and you have apply good knowledge to your trading decisions. For example, today we took a trade. Today was a very choppy price action. This is Russell. And the reason why I traded Russell is because it had relative strength compared to the rest of the indices into the market. I trade the E-mini S&P, I trade NASDAQ, I trade the Dow, and I trade Russell among the indices. And these are my bread and butter, my go-to every single day. These are my employees. This is where I make my income. This is where I make my money every single day. Today, I have noticed that Russell was not violating the 10 a.m. low. This is a very important element that I look for. And as you can see here, we have some institutional levels that are traced. And this was actually the institutional level from which we had actually, obviously we had Biden today that was speaking, right? But this is the moment when the technical was set for this trade. And this is where we entered the trade. The stop of the trade was underneath. Now, as I've mentioned before, if you apply short stops, you have 99.9% chances of stopping out and blowing your account on days like today. There are technical stops that are way less than the stop that we applied for the trade today. However, if you see that if you would have applied a tighter stop other than the one that you have applied, you would have been out of the trade. And instead of taking home a massive winning trade, you would have had a losing trade. And that was not a pleasant feeling. So again, the price went up, it triggered us in, it pulled back. We did nothing in the meantime. Our hard stop was way below here and we waited for the rally, right? So at this point, we didn't know, based on the fact that we still had a lot of news coming in. We didn't know if the technicals are going to win or if the news is going to take over. Remember, we are trading in a news-driven market, and it will be a news-driven market throughout 2022 with everything that is going on geopolitically and domestically. This is the trade. So again, the price went back into the highs by the time, so we had another setup that form, and I presented it in the trading room today. It was a 15-minute rotation. It was a 5-minute inside and a 15-minute rotation. And I also said that if traders desire to add to the trade, to reduce the average for this trade, what they could do is they can add more just below the 1960 level, applying the same stop. And then by the time the price gets back into the 74, which was our entry area, they could scale out the position that they have added and still be in, for example, with the original trade size all the way to the highs. We had a target of 2000 and it completed. We had actually 3 targets and it completed the targets right here. It was a trade that was shifting to the upside. We had a double bottom formation in the overnight trading session, and we had a nice bullish range that it was holding with a new high that was set into the London session. And this was the retest. So to us, it was a really nice trade to be in. Just want to show you another trade that we took last Friday. So that was an example of a day trade. This is an example of a swing trade. We initiated the trade into the $25.75. This is the trigger point where we got in. It was a really nice surprise on Sunday when the price moved higher. And of course, today we have 27.50 for our second target, and we have 3 to 4 targets into this trade as well. So you can see here, even when we're sleeping, we make money swing trading. This is from a trader that has just emailed me just before I came in, and I wanted to add her slide as well. She took silver, and these are micros because she has a smaller account size. So she has about $7,000 in her account. She started her account with $5,000. She went through a down phase, and she took her down. She had her account down. I think it was like 3,700, and now she built it back up to over 7,000. This is one trade that she took, and she took it at 25.72. And as you could see, this at that moment in time when she sent me this email, she was up $1,100, more than $1,100 on this trade. That couldn't make me any more happier, right? And we have the example of longer term trades. And this is a trade that I have been in, and our members have been in gold. We have been looking at gold for a very long time. We have participated in gold in 2020, and we took part of this massive rally. And since then, we have been looking for opportunity to get in long. So we got into gold at 1738. This is the strategy where we got in here. It was based on a double bottom support at that time after the rotation, based on the prior pivot low. And you can see that the price is where the price is trading right now. We do have further targets just above 2,100. Here's another example with oil. If you guys recall, oil was one of the commodities that went negative last year. It went like to -40 or something like that, crazy, and then it popped back higher. You can see that in oil we had a low of $6.50. Remember when the brokers rose the margin requirements, it was literally impossible to trade oil futures. So I couldn't get in oil futures even if I wanted to. So I know there are a lot of traders out there that might say, oh yeah, I picked it up. It was impossible for you to trade it. Okay. But I did find an alternative, and we did trade USO. USO is the ETF, United States Oil Fund. And this actually is I have 2 accounts, one for 3 accounts actually, one for day trading, one for swing trading, and one for investing. And I wanted to take 1,000 shares for investing. Definitely, I picked it up. As you can see, oh, you can't see it here. Okay, so I picked this trade up at where you have the arrow around $16 to $17, and you can see here 1,000 shares up to date. So I took this snapshot today, $82,950 from actually April. I think it was March. No, it was March of 2020. So basically what I'm trying to say is that you can make money, or you can make a lot of money. So when I'm not exaggerating when I'm saying that you can make a 6-figure income or a 7-figure income. In fact, this is in my long-term account. I have another swing account where I have added to the trade. I have exited some shares. I have added some shares. I have exited some shares. So I was like back and forth, back and forth. I didn't want to show you that because that definitely has a different average price. So this webinar is for traders that want to trade in sync with the institutional money moves, momentum, and trends, because I'm a trend trader, and the easier way to trade and the easier way to make money is by following the trend. If you're ready to eliminate frustration in trading, then this webinar is for you. If you want to trade with clarity and stress-free, I literally trade stress-free. Even though this market sometimes gives us a lot of frustration because it's not really lining up as I would like to, because my normal trading day is only about 30 minutes or I'm not kidding, or 15 minutes or at most 45 minutes. So I take one trade or two trades and I'm done. So I really shut the room down, go to the beach or do something else that you enjoy. And now, because of the volatility, you literally have to stay in front of the market. So I left the trading room open today because Russell was still in play, and I needed to still manage the trade for my traders, because it's not that I only call the entries with precision to the tick. I call the stops with precision to the tick. I also call the targets precision to the tick. And I trail the entire position for our members, even for members, for example, that only trade with one contract or trade with multiple contracts. So I do that for them. Obviously, I do it for me. And that's how TradeOutLoud came about, right? So I trade out loud. So every single move, everybody can be on the same page. So if you're ready to become consistent and eliminate the noise, because in the market, and you need to get into that zone, into that market zone where you see the proper setups. And if you're ready to learn the methodology that works on any asset, anything that moves, any chart, I can trade it, whether it's crypto or stocks. It is a universal system. So once you learn how to trade properly and learn how to trade and how to read charts and how to read the market interaction, multiple time frames, candles, formations, etc., you're set for life. Nothing can stop you. So what do you need to get started in trading? First of all, you have to have a burning desire. You have to make sure that you really want this to work. I needed it badly. I was spending about 3 hours in the commuting, about an hour and a half to go to work, an hour and a half to get back from work. So I was doing, and I loved my job. Like I said, I worked in finance. So I was pretty much, on the investing side. But one thing that I didn't enjoy is the long hours that I was working, and also the commute time, which was insane. You also need to have a really good, solid education. Like I said, I don't care where you get your education, but make sure you get your education and make sure you touch upon all that checklist. You have to know strategies, you have to know trailing, you have to know management, you have to know technical analysis, you have to know damage control. So you have to know all of these things, but plus more in order to start trading consistently. You have to be very disciplined, because this is your business now, whether it's for supplementing your income, you can't lose money, right? Or whether it is your income, so your life depends on it, you need to follow a plan. You need to have that blueprint. How am I going to get from point A to point B? Is it going to be up, down, up, down, up, down, but is it going to go trending higher, or am I doing flat, or am I losing money and I'm downtrending? You have to have patience and wait for the opportunities into the market. The market does not present opportunities every 2 seconds or every 2 minutes. You have to wait for the opportunities to come and never chase anything or say, hey, you know what, the price is on support, I'm going to buy it. Or the price is into resistance, I'm going to short it. Remember, there's a lot more going into the pattern than that. And you need to focus, no distractions. So when I trade, I literally, when I trade for 2 hours, I do not get out of this chair for 2 hours. If I want to drink water, I have my water right beside me. I'm getting ready for the trading day. Hey, this is my trading day. This is my income. This is when I produce my income. And it's 2 hours. It's not 8 hours. It's not plus 8 hours plus 3 hours of commute. It's 2 hours. You can do that. Okay. And you need a lot of conviction and perseverance. Not every day is going to be a winning day. So you need to get back into the saddle and ride this market into the next day. So trade from home and income producing style of trading. Why is day trading an income producing style of trading? Well, day trading is an income producing style of trading because In day trading, you get in and out within the same day. So that means if I put a trade on, let's say at 9:35 a.m. and if I can exit the trade at 10 o'clock, then that cash is in my account if I make money. If I don't make money, then I am going to lose that allocated risk amount. But the reason why it's called an income producing style of trading is because you can access your cash at the end of the day. So for example, if you want to pay a bill, if you want to buy something, if you want to go out and have a nice lunch, you could pay with, for example, the gains that you have in your account. But if you are swing trading, or if you are for example, investing, you cannot have access to that cash because, for example, let's say I'm in, I don't know, let's say I'm in Apple long, right? Until the trade is going to hit your target level or until it stops out, you're still stuck into that trade. You know what I mean? So if income means that you're in and out, in and out, in and out. And remember, you only do this 2 hours per day. You give it your maximum focus. Listen, the human brain cannot focus more than an hour a day. So that means that after an hour, the brain goes into a commercial break. So it's only normal. Have you noticed that even now, how many of you guys in here have another browser that is open and you guys are tweeting, Facebooking, and all that stuff? That's because your brain it's natural to do that. And your brain goes on a commercial break because it needs that break. It cannot focus. Humanly it's not possible to focus that much time. So trade futures for a living. We trade in sync with the institutional money flow. So we don't wait. You can see that we have levels, technical levels. And in fact, let me just put it right here. We have these are the technical levels for today that we had on the chart. You could see here that we have some sell action. We have a dotted line. So anything that trades below this, the dotted line is seen as a selling, shorting opportunity. Everything that is trading above the purple line is seen as bullish, and these are bullish price action activities, and so on. So we trade with these institutional money flow. We don't chase them. We trade in sync with them. Like I said, I trade from 9:30 to about 11:30. And 2 hours and done. My major watch is just 4 charts, the major indices, and I deploy precise strategies at the specific time and locations. And I apply very simplified management. So what does that mean? I know exactly, for example, if the price is going to get here into this dotted line, where I need to raise my stop. You can see here that we have a bullish above level. This trade actually traded in the overnight. And then we had another rotation that happened off of this very close to the open. We have reached the first resistance, second resistance, third resistance. When you have multiple resistance above, you need to make sure that you know how, if you're in a trade, you have to make sure that you know exactly where to raise your stop to. So you have to have a game plan. So trading is super simple and dumb, literally dumb. So that's how I teach my traders. So you reach target 1, you do this. You reach target 2, you do this. You reach target 3, you do this. So therefore, when the price is moving, evidently everybody's going to have that emotional feeling that, price is moving, I'm achieving target, I'm doing this and that, right? Because if the trade is not working, if it goes against you, you have a plan, right? You have a stop. Having a stop meaning having a plan. But you need to have a plan at the same time if the trade is going for you. It's going in your direction, and you need to know exactly how that plays out. All right, so I've showed you before that, a couple of charts with our institutional trigger levels. We do have bullish above levels. We do have bearish below levels. We have certain support zones. We have velocity areas. So depending on the day and the environment, we have all of these levels that trigger for us. So trading is really a rule-based system. It doesn't happen by chance. You have to respect the rules. Finding high odds trades, meaning having that allocated risk amount on each and every single trade. So you're consistent, so you're not all over the place. So when you have consistent losses, you will also have consistent wins. Waiting for the proper setup to form, only executing when you have the criterias, all the criterias that are being met. Money management skill that we actually started the webinar with, and you have to have proper mindset. There are a lot of advantages into trading futures. I have switched from day trading stocks. I've been day trading stocks for a very long time. In fact, since 2002, actually. And I have been day trading stocks. And it is very tiring after you do it for so many years. And obviously, I'm profitable in trading. I have had my periods of time when I was not profitable when I first started trading, and then I needed some mentoring. I was very fortunate to receive excellent mentoring. That actually propelled me into the stratosphere, because that made difference for me. And very grateful for that. And since that moment on, I have been consistent, and I'm doing, but don't deviate from your goal and from what you learn. I was trying to learn the easy way out, and I was, navigating, just like everybody else was looking for the perfect indicator that is going to show me this and that, was looking for the perfect newsroom, in my case, that was going to provide me with information with the news information before it actually hit the wires. And all of these things are delaying your learning process. So stick to the process. And, at one point in time, probably you're going to deviate as well, because it's human nature. And I did it too. So I'm not afraid to say it, but get back on track. Okay. Make sure that you identify where your mistakes are and go back on track. Also, futures have reliable volume. And I was saying, I was saying earlier that, when I switched, basically, one of the reasons why I switched to futures trading is because I was paying a lot in commissions, and I was paying a lot in taxes. So one of the reasons why I switched to futures trading is because of the tax advantages. So this is something that you should definitely look into. The tax advantages are phenomenal for futures traders. And if you're trading from the UK, or if you're outside of the US, even Canada, I think you have much better tax advantage if you're trading futures. So that's really awesome. You don't need any special indicators. I'm pure price action trader. You don't need it to use a scanner. When I was day trading stocks, I needed to use a scanner. That's another $350, $370 cost per month. You have now the best opportunity to trade futures, because now you have full-size contracts, and now you have micro contracts. So when I started trading, there was no such thing as a micro contract. So you needed to have a little bit more cash in order to trade futures. But now you could actually trade using micros. A micro is 1/10 of the size of the full-size contract. So for example, if you want to trade NASDAQ, 1 point in NASDAQ is $20, and one micro is only $2. So if you have a small account, for example, if you have a $5,000 account, like one of our members had, then you can easily grow that account into a bigger account. And it's so much doable when you're trading the futures market. It's a little bit easier to do it in the futures than it is in doing it in stocks. And I will show you exactly how that works in a few moments. So one of the reasons, many individuals and many traders are drawn to the futures market is the relatively low startup cost, because, for example, usually requires about $30,000 to open a stock day trading account, and you must maintain that $25,000. Guess what? To keep your day trading status, because if you lose $1, your day trading status is out the door. The futures market allows you to open an account for as little as $5,000. And best of all, you do not have to maintain that amount, because as long as you have sufficient cash in your account, you can that covers the margin requirements. You can still trade the commodity, but wait, there's more, the index micro, and actually have a balance of $700 to $800, and you can still trade it. So it's not like the stock market. So let's talk about the advantages of buying power. Here I have two examples, futures and one for futures and one's for the Qs, for example, for the ETF, right? So for example, if a trader wants to day trade the Qs, let's say they're trading at $365, you need about $14,000 to buy 100 shares. If you want to trade NASDAQ, for example, and NASDAQ is priced at $15,000, trading, let's say at $15,000, you need about $17,000 to buy one contract, right? Because margin requirements goes up. Have you noticed the margin requirement in oil today that went up again, or yesterday went up again? Last week it went up again. So the more riskier and the more volatile the market becomes, your margin requirements going to go up. All right, so let's take a look at the chart of the Q. Same duration of same trade duration was actually 20 minutes. So we put the futures contract to the test against the QQQs. Time versus money versus buying power, right? So we're in a rush, right, to make more money using less buying power and less time, right? We want to be time efficient. So in this case, we used $16,000 to buy 100 shares of the Qs. And in 20 minutes, we made $237 applying the strategy that we trade. Now, in comparison, we took NASDAQ, $17,000 in buying power, so very similar buying power than with the Qs, right? We bought one contract and we made $2,000 applying the same risk. So we didn't change the risk, applying the same risk. Trade duration 20 minutes. So I'm going to ask you right now, what would you rather do? Would you rather use $16,000 in buying power, and buy 100 shares of the Qs and have the price go up and then make $200? Or would you rather, using the same buying power, would you rather buy NASDAQ using the same buying power, buy futures NASDAQ, same buying power, and 20-minute trade duration and make $2,000? But wait, there's more. How about you have a small account, right? Not everybody can trade a full-size contract. Some traders have smaller account sizes, especially if you're at the beginner stage of your career. You don't want to put a lot of money maybe in your account, and you want to see how trading is working for you. This is using $1,760 in buying power. This is one contract. So if you have a $5,000 account, you would have made $181. That's about 10%, right? So morning patterns, let's get into strategies, right? So now we talked about the fact that I usually like to hold positions for about 20 minutes. Today was, the exception to the rule where I had to hold it a little bit longer time, right? I'm not going to take myself out of the trade just because the trade didn't achieve my targets at 12 o'clock, right? So I'm not going to take off. But there are certain patterns that work 80% of the time. Wow. Are you kidding me? So you mean to say that I can be right 80% of the time and be only wrong 20% of the time? Yes. And we teach these strategies based on the rhythm of the market. Because you see, when the market opens at 9:30, it usually has a volatility blast. It either goes up from 9:30 to 10 o'clock or it goes down, right? This is the bullish option that we have here. So if we have strategies that we deploy at 9:32, at 9:35, at 9:45, et cetera, all the way to 10 o'clock. Then at 10 o'clock, there's a certain behavior that is happening in the market, and then usually a pullback occurs. So if the pullback is shallow and does not violate the 10 o'clock low, meaning the 9:30, that pivot low, it means that the market will go higher with a percentage of 80%, with a precision level of about 80%. And of course, you get the chop market like we have today, right? We had the chop market like we have today, plus Biden's speech and all that stuff. And then the market shoots up and then pulls back 10:30. Now, what I wanted to add here is the life duration of the trade, because I like to take momentum trades, but high velocity trades. So what that means is that I like to make the big bucks. So for example, in the trade that I showed you today, we made 26 points. Most of the futures traders aim for 3 ticks, 5 ticks, 4 ticks. I'm not saying that's bad, but that's not my style. I'm not going to waste 2 hours of my day to go home with 2 ticks or 4 ticks. I want to go with the big bucks because this is my income. So I want to give it all I have, right? So for example, trades usually that set up from 9:30 to 10 o'clock have a really high degree of working, like I said, 80% of the time, but you have to be really quick. Don't marry the trade. You're in and out, in and out, in and out. And usually you could have 1 or 2 trades between 9:30 and 10 o'clock. What happens after 10:30 is you shift towards different time frames and the momentum of the market changes. So if, like I said, if that 10 a.m. low holds, that you apply the golden rule. And if that 10 a.m. holds, then your rotation that's going to happen into 10:30 may line up a trade for you. 10:30 is actually prime time trader time. We teach this in our class. It's our favorite strategy to do. By this time, the market has, established the first hour range. The market has already established direction. Maybe at that point, there are, days where, for example, like today, the market hasn't really established a direction. We're still very much sideways, right? Right now, we're still back into support in the overnight for that happened in the overnight action. But typically, if the trade is lining up at 10:30, it has a longer life duration. So what that means that if you take a trade at 9:30 to 10 o'clock, you can expect to be in the trade for about 5 to 10 minutes. But if you take a trade around 10:30, you could be in that trade for a longer period of time. And that means to 11 o'clock or 11:30. So why the futures market? Well, the futures market offers you a lot of flexibility, lots of flexibility. The stock market is open from 9:30 to 4 o'clock. Futures market is open close to 24 hours. We have strategies that we teach you how to deploy, even in the overnight trading session. So if you're not available to trade on those 2 hours, for example, with me, you can deploy strategies that work in the evening session. And they're very profitable. Remember, geopolitical events do not wait for the market to open; they just happen. So you have to have a strategy and a market to trade. Look at the moves that happen in gold. Look at the moves that happen in oil. Look at the moves that happened in commodities. Look at wheat. Look at sugar. I was looking at it earlier. Look at soybeans. And by the way, soybeans is just about to. I just called the trade long today. It has triggered and it looks like it really wants to break out. Natural gas, copper, these are all trades that we were in. So even if you're not in a day trade, because it's so noisy at times, we make our money in swing trades as well. And guess what? We have one trade a week or maybe one trade a month in those commodities. But that one trade is going to make as much as 20 trades, 20 day trades. That's how profitable it is. Yes, I do call swing trades as well in the room. They're not very many because you don't have a lot of commodities, right? So you have to wait for pullbacks all the time. But yes, they do. So we caught that beautiful move in copper all the way to $5. We went in, I think it was $4.45. We caught the move to $5. We caught the move in natural gas. Like I said, in USO, because of the margin requirements, I kind of like stay away a little bit from CL right now. I did highlight some ideas today in oil. Not everybody's the same. I don't want to get people in trouble in the trading room for that. So I do present ideas that are conservative, and I call without hesitation that everybody should take them in the room. Everybody has a different account size. So is it easy to succeed in trading? Guys, it's not really that hard, but you have to put in the work to succeed. Learn before you dive into trading, because remember, there are sharks that are waiting for us, and they're waiting to snack our orders. You guys know that every broker out there, and I think all the brokers, they do sell our orders to hedge funds. They do sell our orders to institutions, right? So what does that mean? Well, institutions account for 87% of the market volume. What do you think they do with that information? They provide it, they feed it to their algorithm. So they know exactly where we are, and they love to take us out of trade. So for example, there is this strategy that is used by hedge funds. If you're seeing that the market is setting up for, let's say, for a buy setup, right? Let's say it's setting up for a nice long. What happens? You get in, but if you get in at the wrong time, because there's that tempo in the market, guess what's going to happen? You're going to get a flash move to the downside. What they do is they force sell. They want every retail trader to stop out, and probably some algos along the way, because they want to buy more contracts or they want to buy more shares. So it's called the force sell, so they can buy more to push the price higher. And then you see the price go higher. Isn't it frustrating? How many of you guys saw this happen to you? I've had it happen to me all the time. So you got into a trade, it was perfect entry, perfect setup. You had to stop everything, and all of a sudden you go like, it stopped you out, and then the price moves up. Well, not anymore, because we know where to place the stop, so we don't get stopped out as often. We just get stopped out, but not as often, right? So it is impossible to have that perfect holy grail trading system. All right, so the next time you want to hit the buy button or the sell button, remember that and ask yourself, would a hedge fund do that? So that would prevent you from taking a trade that didn't have the proper thought process into it. Would an institutional trader do that? Would an algo be set to trigger at that point, etc.? So next time you jump in and try and think about this, that 10% of the traders make money from the 90% of the traders. Well, if trading was easy as reading a book or, finding that perfect indicator that is going to show you with little arrows, buy, sell, they're always after the fact, they're always delayed. Everybody would be an expert, but in fact, trading is about putting everything together, and you're not going to find that. There is no such thing as a book out there that is putting everything together. You can read technical analysis, candlestick, this, that, whatever. You can 20 books on the matter of trading. And you're not going to have that one book that is going to say, hey, here's how you use multiple time alignment with technical analysis. And this is how you apply the trailing system within that certain trade. No, not there. But this is what we teach in our course, how to put everything together. In fact, we have one day where we teach everything. Plus, we do that every single day in the trading room where everything comes to life in trading. So why futures? First of all, it's income from home, whether you do stocks. And by the way, our system is applicable 100% to trading cryptos, to trading stocks and everything else. So it's income trading. It is whether you want to supplement your income, whether you want unlimited income potential, right? You have unlimited income potential. You want to take 3 trades a day. I usually like to take 1 to 2 trades a day and I'm done. Today I took 1 trade and done. 26 points for me. It's perfect. Remember, with 1 contract, we made about $1,300. That's with 1 contract. I mean, can you imagine? Like, that is a really good return on our risk and really good profit. It's a recession-proof skill. What do you think is going to happen with this inflation? We're going to hit recession at one point. It is a recession-proof skill. It is inflation-proof skill. We're going to have money to get gas, right? So you trade, you get more money, you could get gas, you could get food. It's a depression-proof skill. Recession, depression, these are terms that you're going to hear pretty soon on CNBC, okay? Control over your time. You want to trade 2 hours and done, or you want to trade more, you're in control. Can anyone make money in the market? If you lose money in the market, you can make money in the market. It's just that there's always somebody on the other side of the trade, but you have to have the right knowledge. You have to know how it's done. If you don't know how it's done, it's going to be pretty hard for you to make money into the market. In trading, you should only have 4 outcomes. You either win big, you have home runs. And by the way, today, that 26-point move was not a home run. Okay. We have other trades that are home runs, more massive than that. Small wins are great. I was having a conversation today with one of our students, and I was telling her about damage control and how she can work out trades if she is, for example, on the negative side of the trade, how I can help her with the knowledge that I have and with the proper damage control, how she can come at break even. Break even is a big win. And then, of course, small losses. You saw from my performance that definitely small losses are very important, and that increases your win ratio, and that is going to be really great for your account. We trade with a structured approach. Nothing is by chance. We are precise, like literally we trade with mathematical precision. And I'm not kidding you. This is mathematical precision. And that's why it comes easy, because if it meets the parameter, then you take the trade. If it doesn't get into the level, you don't take the trade. It's that easy. So we trade live every single day, a highly successful system that's trading in sync with the money flow in the first 2 hours and enables us to profit on momentum moves at specific times, at specific locations, and with precise technical patterns. Who else trades like this? Do you guys know? Algorithms fire at specific times, at specific prices, at specific locations, and by precise patterns, because they're algos. They have the program that fires that trigger. Our method overrides any kind of news event. Yes, I'm not going to lie, and I'm going to say, hey, you know what? The news, and definitely because we're in a news-driven market, any kind of news is going to impact the market. Any single news that is going to fire out, for example, when you're in a trade, is going to impact the trade positively or negatively. And yes, Biden was speaking today, and yes, he could have said something and crashed the market, but the market held. You should not be fearful of the market. Allocate your risk, take the trade. All right. So trade with the institutional grade trading system. This is what we teach. We teach you how to trade stress-free. We have stress-free institutional levels that you guys seen in several of these slides today. We have precise buy zones, sell zones, target zones, and we apply precise management and easy management. It's really easy to learn how it's done. We only trade high odds patterns and setups. We teach you where to place stops so you don't stop out as often. Also, we do provide trading psychology, a chapter full in trading psychology, so you have your right mindset along with the system. And of course, we teach you actually one of the most important things that nobody does, how to put the puzzle together. So yes, it is possible for you to make 6 to 7 figure income in 2022. All you need to do is to learn how to trade, be wired mentally for success, and follow a person that has been doing it long enough and steal all the secrets and develop your own. We teach the power income futures trading course, which is, like I said, an institutional grade trading system. And this program is for you only if you're losing money in the market. And if you're tired of losing money in the market, if you're frustrated, if you don't have a system, and if you don't have the proper process to eliminate emotions and make trading a fun environment where you could actually love to do. If you lack confidence, then this course is for you. It's definitely going to change your life. I can provide a lot more information if you shoot us an email. If you're interested in a course, just email me at info@TradeOutLoud.com. Me or my team can answer all the questions that you have, and everything that we're going to teach. We can send you the full curriculum for the class. We just wrapped on last Saturday, I'm sorry. We just wrapped up our February class, and it was a fantastic class. The feedback was just outstanding. We have members in the trading room right now. They love the class. They started to make money today. They were very, very happy with the trading results. Literally this whole entire month, even though it was difficult, it was really fun to hang out and, talk market. We have an early bird special for you guys. We have 3 months in the trading room. And by the way, this is gonna go away on March 10th. And we have this offer valid for 2 more days. 3 months trading room access. It's going to be $1,000 off. Plus, if you decide to join with this early bird, you're getting extra weeks in the trading room coming into the March 21st. So you're going to get, for example, you sign up now, tomorrow you're going to have instant access to the trading room, and then you're going to start your trading room access basically starting with March 21st. You also have 12 live mentoring sessions. We're actually starting the live mentoring session next week, so you won't miss a beat. And this is the last time we are closing the door on the live mentoring session. That's it. This is $6,900 value where, I work with traders one-on-one, and we, kind of tweak all of the issues that we may have from preventing you having those really nice gains. This is it, guys. If you guys want to sign up or you want to learn more, go to TradeOutLoud.com/futures. Don't do the www. Just TradeOutLoud.com/futures. And remember, we're voted #1 in the industry. Thank you so much.